While markets are hitting record highs, small cap stocks have been left behind, but is a buying window emerging for ETFs. This is Inside ETFs, and we're talking small caps. The smallest US stocks have rebounded nicely from their early April lows, but it's been a challenging year. The Russell 2000 index, a small cap benchmark, hasn't made a fresh record high since 2021 and has fallen nearly 2.5% year to date. Uncertainty sparked by President Trump's trade tariffs still persists, and you may be wary of exposing your portfolio to the market's riskier names. Cinthia Murphy of TMX VettaFi thinks that the tide may be turning for small cap ETFs. So Cinthia, why is this? Is it simply a case of so bad it's good?
Hi, Peter. It could be a little bit of that. In truth, small caps in the second quarter have started to deliver a positive performance. It's been, to your point, a turning of the tides. Some of it is just the rising tide is lifting all boats, because we've seen also that performance pick up in large caps as well, and small caps are benefiting from that. But there's a renewed focus on the opportunity in small caps because they have underperformed for so long. Their valuations are so attractive, and a lot of these names, could benefit as this uncertainty dissipates a little bit if economic growth indeed delivers. So it's a moment where we're seeing a lot more conversation, turn its focus into small cap opportunities because these names are looking pretty impressive, especially outside the US. It's been a really interesting year for small caps internationally.
You've highlighted as well that the best performing small cap ETFs year to date are international ex-US funds. Is the problem just the performance of US markets?
So international equities have had a great year, as you know, across the market capitalization spectrum. In the small cap space, if you think about European stocks specifically, the ECB has been a lot more supportive in terms of rate policy and just overall policy. It's been supportive for economic growth and for these stocks, much more so than in the US. We've seen a Fed that has been very slow to act, has not touched rates yet this year, and small caps have been looking for that first rate decrease in the US to really pick up some momentum here. So the policies have been more conducive for small caps internationally, especially Europe. Some of these funds have delivered like up of 23% of returns year to date, which is really strong performance compared to the US space. And there's also, different themes. There's a lot of thematic undercurrents here as well that benefit both US and internationally. So if you look at a lot of the strongly performing small cap ETFs, they're heavy industrials. Industrials have been the best performing sector in the US, really strong performing sector worldwide, a lot tied to the defense stocks, the movement to invest in defense, a lot tied to nearshoring, everybody trying to bring production of things, manufacturing domestically. So there's different currents supporting small caps, and international has really benefited this year.
Funds as well, focused specifically on value and quality, are doing well. What will you be watching when earnings season rolls around?
Quality is a really interesting aspect of the small cap investing opportunity, because if you think about the Russell 2000, about anywhere from 35 to 42% of those stocks are unprofitable. So small cap space can have a lot of really risky names that tend to be cheap for a reason. And so we find that, funds that focus on the valuation opportunity, so you have the higher upside potential relative to large caps and relative to the broader segment, but that also screen for that quality. They're looking for the high profitability names, for the fundamentally strong small caps. Those are the funds that tend to do well, especially longer term, because we're avoiding the cheap for a reason stocks and the small caps that are so focused on trying to grow that they remain unprofitable for a long time.
A date ahead as well. President Trump's July 9th tariff deadline is quickly approaching. Will tit-for-tat trade wars spell doom for small cap ETFs?
We're hoping, first of all, for, if nothing else, for clarity. I think just getting the cloudy skies to clear out a little bit so we know what's going to happen on the trade front is going to be important for small caps. All this uncertainty that really poses a risk to economic growth just really is a headwind for small caps. Now, how this trade works, it depends on how much those small caps are exposed to international trade. A lot of them are very domestic focused, so they've been kind of immune to the trade talks anyway. But the truth is they have much less pricing power versus large cap. They have less flexibility. They have more difficult access to capital. So if trade tariffs, impacted their business model, I think we're going to start seeing a big dispersion on the small caps that are more domestic focused versus not in the trade war environment.
So finally, Cinthia, Trump's spending bill, easier lending rules and possibly lower rates ahead. Is the future bright for small cap ETFs in the second half of the year?
If all those three things deliver as expected, then I would say yes. All those things would be conducive for small cap stocks to take a breather here and rally. Their valuations are really cheap from historical levels, very, very cheap. And if all the regulation, the policy, and the economic growth is conducive, they're ready for a pop.
That was Cinthia Murphy of TMX VettaFi. Don't forget, you can watch more videos on Reuters.com.